Unlike stocks, whose price often depends on a limited business environment, currencies are moved by global forces from different economic environments to international trade, inflation, central bank rate changes, and the psychology of the masses. Now, unlike stocks, which could suddenly change in value due to internal reasons unknown to many outside traders, currencies are moved as a consequence of global happenings and trends which are known to all public. Price trends, which start with many powerful forces behind them, have a tendency to last longer and be steadier in appearance and duration. If a US Federal Reserve Bank decides to lower the US dollar interest rate, it may become less attractive for investors to hold deposits in US dollars. Thus, it is realistic to expect that many of them will sell dollars and buy some other currency which offers a better rate. After they start to sell their dollars on a massive scale, it is realistic to expect that US dollar valuation will start to fall against other currencies, as the dollar becomes a temporarily less attractive currency. As more and more traders realize this move, they will jump in by also selling dollars in order to profit from the move. With time, a visual trend will start to form on the chart, motivating even more people to sell dollars. This move, which started as a consequence of a concrete economic event, continues with a mixture of real happenings and psychological forces. Psychological forces represent one of the most important generators of price change on any market. This is because people are prone to be influenced by others, a so-called herd mentality. Contrary to historical events that are unpredictable, human behavior has been a predictable factor for centuries. The main forces that motivate traders are sort of greed and fear. If you hear on the TV or read in the newspaper that the price of rice will go up and people around you start talking about it, you will start to believe it and buy some rice just in case. In other words, you are influenced by other people's opinion and not by real facts. That is herd mentality. As a trend starts to materialize, more and more people will spot it and start to believe in it, which will further enforce a move. The more people who get involved in this trend, the more robust and long-lasting it will be. That's why trends are the most lucrative periods for trading, as they act as a self-fulfilling prophecy. As a consequence, the periods of a trend are also periods of the lowest risk in trading. The main catch is how to spot a trend early on, and how to exit before a trend exhausts itself or even reverses. That is a topic we will cover later in this course.